titled China's Financial Crisis in the Making, The Clash Between Political Control and Economic Stability, and it's based on the work of Ming Xia. All right, let's dive into it.
Please, 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 take it away. You started off, you have the entire essay, take the floor, and I'm going to hop in with some questions.
All right, here we go. In recent years, China has stood as a symbol of economic power and resilience. Having sidestepped the 1997 Asian financial crisis and the 2008 Great Financial Crisis, many in the global community viewed China as economically exceptional, perhaps even immune to the types of financial collapses that have plagued other nations. However, Ming Xia's research, titled China's Financial Crisis in the Making, paints a different and more troubling picture. It argues that a crisis is not only possible, but increasingly likely due to deep-rooted structural flaws, political interference, and a dangerous over-reliance on the state as the ultimate financial backstop. And that's just the start. Feel free to jump in with any questions you have.
Please, keep going, keep going.
All right. At the heart of Xia's argument is the concept of the soft budget constraint. This is a system where failing firms and institutions are continually bailed out by the government, which removes the financial discipline that typically forces restructuring or closure in a market economy. In China, this has led to a dangerous accumulation of risk across state-owned enterprises, local governments, and the banking system, all of whom operate under the assumption that Beijing will always intervene to prevent a collapse. This creates a moral hazard because the expectation of rescue encourages reckless borrowing and spending. The essay goes on to explore how the absence of credible institutional constraints in China's political system further complicates things. Without independent financial regulators, a truly autonomous central bank, or transparent rules, it becomes harder to maintain long-term fiscal discipline and market confidence. Let me know if you want me to keep going.
Yes,
Or
please. I mean, I would say to keep going. I want to hear the entire argument.
got it. Let's continue. Another key issue highlighted in the essay is the sheer scale of China's debt. From 2007 to 2014, the country's debt quadrupled, reaching about $28 trillion. Much of this debt is tied to real estate and shadow banking, which are both vulnerable to market downturns. Local governments have also accumulated significant liabilities through off-balance sheet financing vehicles, often used for infrastructure projects without clear revenue streams. Although the central government has tried to absorb and restructure some of this debt, its capacity to continue doing so is not unlimited. The essay also touches on how economic management has become more politicized under Xi Jinping. While previous decades saw a shift toward market liberalization, Xi has reasserted party control over key sectors. For example, the 2015 stock market crash and the government's heavy-handed response, which included arrests and media censorship, highlighted the risks of this command-style approach to economic management. In conclusion, the essay argues that China's financial crisis, if it happens, will likely come from internal issues rather than external forces. These include a shrinking workforce, declining productivity, and the challenges of shifting from an investment-led growth to consumption-led growth. Without meaningful reform, China's economic miracle could face significant challenges in the future. Feel free to ask any questions you have, or if you want to dive deeper into any part of the essay.
Okay. So first things first is I want to say, at least my own standpoint, this is an audience note, I do agree. Now, when we talk about the United States and China, and I know that I always bring them up, that's always intertwined. The unfortunate reality is they're literally the two largest economies in the world. I don't really have a choice. To have a really good discussion and an understanding of what's going on is to understand currency. You see, China and the United States have their own major currencies. China is able to print its currency. The United States is the world reserve currency of the world. And when you have the ability on having that control in your currency, you, in fact, can choose to get yourself to the point of having this huge amount of growth, but that's through going ahead and printing more money and continuing to expand said monetary policy. China is doing it, the United States is doing it. It is the cheapest and easiest way to grow. I have been skeptical of, now, for, for the record, I would have him in my government. I think he's a very intellectually genius of a man. Peter Schiff's argument is correct and incorrect at the exact same time. Even my own opinion is correct and incorrect at the exact same time as well. You see, you need a little bit of everything. You need a fiscal growing of the monetary system while also being able to handle and service the debt and be able to not change position, but be able to have a vast investment over the entire country. So when we're dealing with China, they're having to push harder than the United States, but their growth, the changes in their economy, how much it has expanded. Now, the worth of said currency is extremely debated. We obviously have a market that determines these prices, but we also at the same time understand they're continuously devaluing their currency. They've had very cheap labor for a very long time. You may need to go out maybe the last 15, 17 years to look for more lower prices. Things have changed since COVID, obviously. But what we can say is the following: when you choose to continue to expand your monetary policy, what you're doing in all actuality is you are essentially pushing more dollars into the system. Now, how it's directed is interesting, and that's where the hate between China and the United States come from. The United States, at times, it can hit a target. China, for instance, sticks needles in the arms of its patients and slowly goes to every single vein and specifically and meticulously go ahead and lay the groundwork of what needs to be done in different provinces. And they've done that for a long time. And I think you have to be extremely meticulous in order to be successful. The problem is, well, the United States has been able to artificially push up the rate of its overall currency. Here's the larger picture as well that people don't talk about. If you own a house or a stock, not a shitty speculative stock, but a relatively well priced, well put together company, and over a long enough period of time, we continue to print dollars, you are going to see those dollars channel into the last part of the economy. It'll take a while. When Biden put, money into the economy, it took a little bit for that money to work its way through. It has to go from the government and from the actual departments that hand out the money. Then it's the contracts, then it's the guidelines, then it's the time periods, then it's the scopes. And as that money continues to trickle down, once it hits the everyday normal person, it'll be able to ping pong it around and kind of hit as hard as it can to get as much as it can. That's when the economics becomes extremely interesting, and that's when it matters the most. Now, these dollars are eventually going to trickle down to the workers. The workers are going to either, whether it's major conglomerates, whether it's local mom and pop, whatever it is that you do, if you choose to spend it back into the economy, it'll continue to hit hands, and eventually it will find its way, whether that is the excess of profits that the dollar gets broken into 10, 30, 40, 50 cents, whatever denomination of the $1 you want, you're going to end up in an even stranger place. Because what it's going to mean is, as those profits eventually get towards the end of the economic cycle, you start to become those who are dragon hoarders. And these can be thousands, millions, of people, whether it's owning financial assets, them owning the 401ks, whether it's actual business owner, whether it's a large hedge fund, a bank, you are eventually going to hit it into a just dragon's nest of nonsense. And you're going to have people who are going to want to artificially hoard said wealth. The problem is they're going to own a lot of assets as a byproduct of that happening. And when that finally happens, their assets are going to increase. The more money printing, the more dollars in circulation. If these people aren't looking to work or to reduce or to create equal output to said dollars and then making it neutral, you end up in an even worse position, because then it means that more dollars in the economy means that everything else has to then adjust. You see, prices will then go ahead and have to go up. Housing is going to go up, and this end up being a triple entendre.